How's everyone doing today? Shankar P right here. Today we're going to talk about the markets and see what's going on. Bitcoin has been moving up. S&P 500 has been moving up. And we're also going to look at some trades today so you guys can see how you can also profit in the market. So without further ado, let's dive right into the charts. Alright guys, so today we're going to look at the S&P 500 on, first we're going to look at the monthly time frame. So right now we have 10 days until the monthly candle closes, but what you guys can see is that we have actually made new highs on the S&P 500. And not just that, if we actually zoom in and look here on the weekly time frame, we've had a pullback, a rejection, and broken above. So we are right now actually in what we call blue skies or price discovery. So what can we anticipate moving forward? So normally whenever we have a price discovery, blue sky type of event, and we can look here in 2020, similar type of setup where we broke above, we had this pullback and headed further up. So what we can anticipate is, the price to really increase at an exponential level when we are in price discovery. Anytime we are in price discovery, as you can see here as well, we broke up, had a pullback to the area of support, and then continued on higher. If we look over here as well, so in this occasion, we had right here, the price came all the way back up and then actually fell even further. Now, things to consider with this in the 2007-2008 is, let's put on top the yield curve. So the 10 versus 2 year. And let's consider something. So right here, so let me just put this 0. So this is the area where the yield would be inverting and uninverting. So let me just slap this horizontal line right at 0. Okay, so consider some things to consider in this scenario is that when we uninverted, when we had this pullback, this first pullback, the yield curve uninverted, and when we came up and had this rally, as the rally was getting to new highs, the yield curve at the same time uninverted as well, right? So we uninverted maybe, I would say, so May. So it was May when the yield curve uninverted, and then we had that pullback in October, right? So you want to consider that as well. So the market is a kind of like the composite man, where you have to look at more than one thing. So we want to consider that when we had the opportunity for the price discovery, is that the yield curve was showing us that we were having, the price here back to 0. There we go. So we got to keep this at 0 right here. So now if we look at where we are right now, the yield is not actually, pull this back down. The yield has not uninverted yet. However, it is close to that. So what we want to consider is we will have a price discovery opportunity in the market. But with that being said, once the yield curve has uninverted, there may be a 6 to 12 month period of a pullback in the market. So do I think we're going to have a same situation as over here when the yield curve inverted? When the yield curve uninverted, when we had this kind of double top here from 2000 to 2007, no, I think we're going to have a price discovery and a rally, and then once the yield curve uninverts, then I do believe we will have a bigger pullback in the markets, right? So just like over here, guys, the yield curve inverted, and you know, we kept pulling back. Oh yeah, and we yeah, and as well as over here in 2019, and then we had the COVID-19 crash in February 20 of 2020. So those are some things to consider. But as of now, guys, if we look at the S&P 500, we're looking bullish. We're looking good, and the price looks like it's going to, you know, we're gonna have a nice rally and new all-time highs. And the thing is, once we have price discovery, the news is gonna pick it up. People who have been on the sidelines, they're gonna be watching the news, and they're gonna put money into the market. That's something that you guys want to consider. That's something that you guys would want to consider, is that we are going to have this nice price discovery, because most people have not been watching on how we've been up almost 38% in the last year and a half, right? So just consider that, guys. So let's look at the TLT. So TLT on the weekly to monthly time frame, you have a nice bearish rejection against the 61.8 as well. We still are in this downtrend, so we still have this weakness of price. You know, we had a low here and then a lower low all the way over here, right? So that indicates to us we are still in this downtrend, and when the yield curve is bearish, that is a good sign for risk on assets. Now, if we scroll into the 4-hour time frame, let me just remove drawings for a second. So on the 4-hour time frame, what I can see is we've actually, you know, we broke this area right here. We broke this area right here, and we have been on this uptrend, right? Now, this is a point right here for that I'm looking at for the yields, the TLT, the treasury bonds, to break below. If we break above, maintain this and head higher, you know, we could keep heading higher on the bonds. And to be honest, guys, once we have a full reversal, it's normally indicating to us that people are risk off. But as it sees on the monthly time frame, we are bearish. But if we zoom into the 4-hour, it is forming more bullish structure as we go into smaller time frames, right? So yeah, let's just stay on the 4-hour right now. So yeah, we could see here, we do have this area right here where the price is still underneath. So we did have this breakdown from consolidation. Some people would consider this some form of Wyckoff schematic here, and we've broken below and we got this rejection. So if we break below this area, because this is the last low before a big push, so it indicates to us that, you know, breaking below this will actually, you know, create more of a downside movement. So we want to see how the price action reacts. You know, we got this nice bullish candle here for the bulls, but if we can break above, if we can either head up to this level here of this support and this resistance area and then head further down, that would be good for the price. But yeah, that would be good for markets risk on markets. But as we break higher, that is actually indicating to risk on that they may actually be a little bit more worried, right? So let's look at the DXY, guys. So if we look at the DXY on the monthly time frame, again, we do have 10 days left until the month is over. We have close to what is a bullish engulfing candle, and like I've been saying, guys, this is a point of support that we've been on for the DXY, right? So this was a support that I've been saying for us to actually consider looking at. But if we scroll into the 1-hour time frame, we have right here the price has head lower. You know, we have right here, so the price is not broken above here. So for me, that is still looking bearish. However, we have this area right here that the price has broken above. So now if we break above here, or we come back down here and have a retest and start heading back up, that would give me more confidence that we're actually going to be heading further up. But if we break below this area and get rejected, come all the way up here, get rejected, and then break below, that would indicate to me that we would be actually having, the DXY heading further lower. Okay, so let's look at the mortgage rates, guys. So for the mortgage rates, it is still heading down. Really looking for us to break down here for more downside. But as you see, guys, the mortgage rates are heading down. Real estate market, I mean, we are at this area of resistance in the 61.8. So this was a big area of resistance. So having a rejection is totally normal. But we always want to consider is that when mortgage rates go down, interest rates go down, assets go up, because now it's cheaper to borrow money, right? So that's how the market really works. So you really want to watch the interest rates, because if interest rates go up, people are not going to have enough money to borrow to invest, and so assets are going to be worth are going to have a pullback, because a lot of investors use leverage to grow their capital. So if capital is expensive, they're not going to be investing as much, right? So consider that. All right, guys, so now we're going to look at the trade of the weekend. Really just the trade I took on Friday. So what we're going to do here is we're going to look at, where are we here, right? So we look on the daily time frame. So this is GBP JPY. We have this areas, we're in this uptrend, this nice uptrend, right? We're in this uptrend, and then we have this consolidation. This consolidation where the price came back down to. So we're at best consolidating. We've broken this area here on the daily time frame, right? So this right here. So sorry, at worst we're consolidating, at best we are going to be heading higher, right? So zoom, so that's on the daily time frame. So I'm looking for buys. Now we go into the 4 hour. What do we see? We see higher highs and higher lows. We see a low right here, we see a high right here, right? We see even this low right here. So this is a low, this is a higher low, a high, and then we have a higher high right here, right? Or sorry, a higher high right here, right? So we are in an uptrend. So what am I looking for, guys? So I'm looking for buys. So now what do? I go into the 1 hour time frame. Go into the 1 hour time frame, and I draw my point A to point B counter trend line. So point A here, so bullish engulfing candle here for my point A, and then I have another bullish engulfing candle here for my point B. So what we do is we look, we assess, and I also do draw support and resistance right here. So we have support and resistance right here, right? So you can see that the candles are being supported and resisted at this level, right? So we add that there. We also add a support resistance line here, and you can see that the candle have respected this area, right? So this is a 1 hour time frame. So on the 1 hour, and I'll kind of here, let me just put the replay mode to where the price was at the time. So price was here at the time I was looking. So we have a bullish engulfing candle, very nice bullish engulfing candle, right? So we have the price came down, another a bullish candle here, and then this bullish engulfing candle engulfing this, right? So very happy with that. However, when I actually entered was on the 15-minute time frame. So we entered on the 15 and 5-minute time frames, and the reason for being is actually, if you look here on the 5-minute time frame, you have this inverse head and shoulders, and normally I like to enter a bit sooner for this inverse head and shoulders type of move, but I entered on this candlestick right here, right? So I entered on this candlestick right here, and I entered second. Yeah, so you can see the head, the shoulder, the head, and the shoulder. Normally I would enter right here on this bullish engulfing candle. However, I wasn't at the chart at 7. Normally I get at the charts at 7:30, as well as you can see that there's a demand zone right here, right? So we have this demand zone here where the price came into the zone. We had this bullish engulfing candle, right? And then we have the trend line on the 1 hour where it's bullish. And then we have this here, right? So that's a high probability setup. There's so many confluence for you to actually just enter that trade and, you know, get a better risk reward. However, we entered on this bullish engulfing candle here, and then it played out. Now, I entered a second order on this candle. Entered a second order on this candle. Reason being, we have this bullish engulfing candle here, and then we have another bullish engulfing candle here, as well as we are on we're on this 1 hour support and resistance that was drawn, and we are on a Fibonacci 78.6, right? So that's, let me delete this because of price action. Yeah, so that's the second order that we entered, and then the price, we took it all the way up. Now, with this trade, I was very happy with this trade. However, and again, we could have maximized profits for the day, only because right here we have a demand zone. We have a supply zone up here that's strong. Could have taken a short here back into this support zone. However, you know, you don't want to be greedy, but at the same time, that was an easy trade right there that we could have taken. And then we rolled the price. All right, and then I closed it a bit earlier, only because it's Friday and I do not want to hold trades all the way throughout the weekend because of fees. However, if we look at this structure now, we've broken over here. There's a high probability that Monday or Tuesday we're at least going to get to this area right here, right? Whether we get rejected and head further lower, I don't know, but there's a high probability that we do get to this area. So tomorrow, or Monday, if we get a pullback into the zone and a bullish engulfing candle, I will be taking a position in this zone and all the way up to this supply area, right? So, and this is it, guys. This is it for today. I hope you guys enjoyed. Please comment, subscribe, and share, and tune in next time for some more Bitcoin macro and trading information. Keep updating, you know, as I get better, the charts get better. I haven't been posting every day, mostly because I've been studying, reviewing, trading, just so I can get better as a person to provide more value to this channel, and, you know, hopefully get more clear and precise so that you can understand the charts even more. So I hope you guys enjoyed. Please like, comment, share, and subscribe, and tune in next time. Thank you.